We haven't seen a 920 monthly cross in years, but GameStop is coming up on one going into July. Last time we got this was in 2020, and then GameStop ripped 3,000% in 2 months. It's at least worth a watch, even if it only pushes 52-week highs in August. Now, is 3,000% upside actually realistic for GameStop, and can it happen? What price would we be at, and are we about to be filthy rich? Today's video, we got a lot of stuff to cover with AMC and GameStop, the overall market, crypto. Watch until the end, like the video, subscribe to the channel, and if you haven't watched the video I uploaded yesterday covering AMC and GameStop's charts and the full update coming into the week preparing for July, make sure to go watch that. Okay, let's jump into GameStop's chart. Where would, from the price we're trading at today, GameStop be if it ripped 3,000% once again? That's going to bring us up to around $782.70 on GameStop's share price, and now we're only trading at $24. So that seems like an extreme far away fairyland tale. However, that does not have to be the case. Once there is forced closeout, as long as everybody, all the shareholders end up holding and not selling their shares, this is theoretically possible. However, what is likely, in my opinion, is GameStop to potentially top out around $325 to $340 this time around, before potentially waiting more years and then essentially gradually going higher and higher. Now, why am I saying 340? What is that? That is a 1,200% gain from where we're trading at right now, which is not too far out of the woods. GameStop was already above $120 at one point, but these are the levels. If you draw out some fib channels from GameStop's high to GameStop's low, that shows the very top of what GameStop could potentially do, and I think that is likely this time around that GameStop will break back above 120 and potentially go anywhere between 120 and 340. So those are levels to watch. That's also a 1,200% gain, which is enough money, especially if you're in any sort of call contracts. Now, we did cover the charts. We expect these large moves over the next couple of months, and this is exactly what we see. If we see the cross now, GameStop rip 2 months later, I expect it's going to rip sooner than that, or at least start its rip sooner than that. Now, we're going to talk about what AMC can hit, but what I find interesting as well is if you drag a fib channel from GameStop's high way back here in 08 to GameStop's very low, what you're going to see after you draw it out is a control point. Now, what's so interesting about this control point is that this is where GameStop tops out every single time, at the top of the fib, and that fib level is around $60 to $65. Okay, the high to the low that lasted insanely long. GameStop hit the top of the fib. Now it's gradually trading in the fib, ready to create new fib levels, and that's just something that I wanted to point out and put on your radar. Find it interesting that GameStop loves to come up around $65 and get rejected, right? AMC. However, what can AMC possibly hit? Based on fib levels, this does not have to be the case. AMC would max out around $800 as well. Now, this is completely different than GameStop, because GameStop would have a 3,000% gain and AMC would be at a 19,000% gain. Is that realistic? Not if everyone is not holding. What's realistic is back up to 310, back up to 500, potentially even 680, while GameStop's at 780, which is still a 9,000% gain. Now, this might sound unrealistic, but AMC once hit 390, so it's really not out of the woods. Things just have to change. Now, either way, over the next 2 months, I see AMC coming up to a minimum of 1750, which we talked about, and that's still a 260% gain. There's a lot of money to be made over the coming week. Now, we also talked about this yesterday, but just some screenshots, how AMC's volume went from 16 million to 48 million in a couple of minutes on Friday, and you can see the change right here with these Webull screenshots. Someone knows something is coming. Now, Adam Aaron dropped a tweet. We are always thinking about our shareholders. For more than 1 million members of AMC Investor Connect, get a free Sprite Chill Icy at our US theaters in July. I'm not going to throw out any tinfoil hats, but the same thing happened back in 2021, June 2nd, when they were giving away a free popcorn. Now, cinemas could be back. Box office numbers could potentially be breaking all-time highs, so another beautiful thing to see as well. Now, ISDA publishes framework to prepare for closeout of derivative contracts. What does this mean? Preparing for the closeout of derivative contracts may refer to the International Swaps and Derivatives Association ISDA closeout framework, which was launched in response to the failures of Signature and SVB in March 2023. I'm going to tell you right now, some banks were just identified showing extreme weakness, one of them being Goldman Sachs, which is one of the largest banks, and having an absurd amount of swaps among 4 large banks, including Bank of America, as well as Goldman Sachs and JP Morgan, having way too much over-leveraged danger weakness amongst the banks. And we're seeing more and more things being published like this. There may be a catastrophic event in the near future, which is going to bring us into stocks will fall 30% as the US economy heads for a painful recession, according to another strategist. First, JP Morgan called this out. Now we're seeing it once again. Is the market actually going to crash? Well, it's hard to say. One thing I can say is that I agree with this. Hedge funds are dumping tech stocks despite their recent rally, according to Goldman Sachs. Hedge funds have been aggressively selling tech stocks, media and telecom sector in specific in the past month, with the amount of monthly net selling on track to be the largest on record going back to 2017. Now, what I'm saying here is that we have called out overcrowded trades, and these overcrowded trades include Nvidia, they include Apple, they include blue chip sectors, and once one goes down, dominoes start to fall, and you're seeing the domino effect slowly start to happen. A gradual downside there means a potential gradual upside on our meme stocks. Not only that, but hedge funds are cutting risk, and Goldman Sachs put out another article regarding that, meaning they could be getting out of short position. Now, high-speed traders, short sellers, face growing Asia crackdown. Regulators in Asia have tightened the screws on trades popular among hedge funds as stocks slumped in an attempt to stabilize markets that some worry may end up stifling key strategies. Thailand's plan to increase scrutiny on high-frequency trades in effect Monday follow steps from China, where program trading will soon be subject to real-time monitoring. While authorities expect the moves to enhance transparency, the growing control over certain trades has raised concern that liquidity may tighten and make those markets overall less attractive. We are seeing more and more crackdown on short sellers and high frequency trading. And with that being said, June 30th today is the last day where the CAT system report card is supposed to be created, the first report card, which is going to hopefully expose a ton of things and give regulators easy oversight that the public can see to where they have to react upon. Fingers crossed, right? What I'm saying here is if someone publicly robs a bank, it's going to be hard for authorities to not arrest them. Now, jumping into Bitcoin's chart, we said we wanted to close the week above 61.5 just for this trend to not give us an answer in response, right? To show us that we're going lower, and you're seeing that happen once again. Today is Sunday, and Bitcoin is back above 61.5, trading at 61.6. I don't know how long, but now we're heading back up towards this channel. Realistically, we want to see a close above 63 to show any strength, but there's no strength here. We're just seeing a lot of indecisiveness on Bitcoin, and I want to bring us into Ethereum really quick because things are getting to a dangerous spot. Ethereum is retesting this fib level again around 3,300, and this is key decision point where Ethereum comes up between 42 and 4,800, or we see a breakdown and Bitcoin's going to follow, Ethereum potentially selling off all the way to around 1,900. Let me know your thoughts in the comments down below. And CZ from Binance is coming back within 4 weeks according to some sources, and this could be good for crypto. Crypto may react well. Now I want to give you some price targets that I gave Discord for the week. Not necessarily for the week. This could happen pre-market Monday, right? I'm just saying I expect these to get hit at some point this week. SPY coming down to 538, Nvidia coming down to 111, AMC up to 585, GameStop down to 2350. These are just some levels. Again, if the SPY hit 538 in pre-market, then expect it to potentially go higher or go lower. Nvidia, if it doesn't hit 111 and it instead goes up to 150, expect it to come down to 111. Either way, some point this week, I expect these to be hit. With that being said, if GameStop comes to 2350, expect it to bounce from there. Nothing I say is financial advice. I am not a financial advisor, but this is what I got for you guys for today's video. Hopefully you enjoyed watching or found value out of the video. Let me know what you guys did throughout the weekend. Hopefully you enjoyed your weekend. Happy Sunday. God bless. And I want to cover a couple things. The third link under the video is Discord, where you can come talk with me and the most amazing people, stocks, and crypto all day long. We also have options trading alerts in there. I post my trades as soon as I take them. Overall, best vibes. Whether you're a beginner or advanced trader, this is the place to go. So get in the Discord. It's only a coffee a month. Level yourself up. Level your trading journey up. If you want free money and a very good platform. Use the second link under the video, open a Moomoo account, and make a deposit into there before June is over. Today is the last day for it. You're getting up to 15 free stocks and earning 8.1% APY on your uninvested cash for literally doing nothing. Again, open an account, make a deposit. You're also getting level 2 order book data for free, so you can see where whales are loading up and dropping off shares of your favorite stocks, access to trading options, going long, going short, viewing other exchanges, and more. So level up your trading and go do that. Lastly, the Lottery Stocks Toolkit puts a strong focus on pattern trading. Once loaded, the toolkit will accurately identify patterns and label them. Targets are provided for each pattern to give traders insight into possible future market moves. For added confluence, a cutting-edge forecast is provided, analyzing previous price action for the most similar behavior and forecasting out what might occur. When used alongside the pattern identification and targets, they are a powerful pairing for all traders. Go get my toolkit right now. It is the top link under the video, in which you can add to your TradingView charts. Level up your trading journey. That is it, guys. I love you all. Lottery Stocks out.